Good morning. This is Dylan Jovine from Behind the Markets. Happy Monday. Today is the first full week of 2025, January 6th. How exciting. Today, I wanted to talk about the thing that is the most dangerous, the biggest risk to stocks going into 2025. And it's something that I really want you to focus on. Is this anything that you get from working with us here at Behind the Markets? This is one of the key, most important things that I really want you to focus on, and that is the yield on the 10-year bond, okay? The yield on the 10-year bond determines and controls more than anything out there other than stock earnings, okay? So remember, I've said this before and I want to say it again. Stock prices and bond yields have an inverse relationship. In other words, the 10-year Treasury yield, the 10-year yield, it goes up, stock prices go down. The 10-year Treasury yield goes down, stock prices go up. It's a seesaw relationship. This is very important. Now, everything that I've been talking about in the past 6 months about the deficits and the debt and the spending that have happened in this country since 2020 really show up in the 10-year Treasury yield. Now, remember something. In the past year, the Fed has lowered interest rates 100 basis points, 1 full percentage point, okay? While that has happened, the yield on the Treasury, the 10-year Treasury, has gone up basically about that amount, 80 basis points, almost 1 full percentage point. It depends on the day. But just to show you how inversely correlated they are, how much of a seesaw relationship this is, I pulled some research from Evercore ISI, and they talk about since the 2020 yield low, since 2020, when the Fed pushed down interest rates, really, since then, stocks have advanced a cumulative 117% over 1,754 days. Basically, since the 2020 yield low, stocks have advanced a cumulative 117%. Basically, stocks have doubled since the 2020 low. But, however, stocks slipped 2.1% over the 89 days when the 10-year Treasury yield rose above 4.5%. And they were down 3.7% over the 20 days the 10-year Treasury yield traded above 4.75%. Now, this is the reason that we have felt the market's been so weak in December, because that Treasury yield, that magic number of 4.5%, it just started to bounce above that 4.5%, which pushes stocks down. It really acts like gravity that pulls stocks down. And if this yield goes from 4.5% to 4.75%, it'll push stocks down even more. So this is 4.5% on the 10-year Treasury is the magic number, okay? The magic number. Since 2020, this is a good illustration of this research. When the yield hits 4.5%, stocks just start to go down, period. When it hits 4.75%, stocks go down a lot more. And we think it should be about 5.5%, which means the market would be down substantially from this price. Anyway, I want you to focus on the U.S. 10-year Treasury yield. And you look at that. And if you ask yourself whether you should feel optimistic about the stock market or cautious about the stock market, don't even ask yourself the question. Just look at the yield on the 10-year Treasury. And if it's at 4.5%, be a little cautious. If it looks like it's rising up to 4.5%, be a little cautious. If it's over 4.5%, be very cautious. If it's 4.75% and above, the evidence speaks for itself. So I really want you to start thinking of stock prices in relation to Treasury yields so you can play this game with a little bit more sophistication. Anyway, happy Monday. That's all I have today. I'll see you tomorrow.